All right, so now, yeah, let's go live. So welcome in everyone. Welcome to tonight's live. Thank you for joining me. Today is January 14th. We are doing this live session right now, 7 p.m. every Sunday, Eastern Standard Time. Thank you for joining us. We're going to go over first the market news. So if you look inside the Discord channel, we are going to go to Forex Factory. We're going to go over the news for this week. We're going to have a couple different red folder news. We're going to be identifying all the red folder news so you guys feel comfortable when it comes to trading your pairs. Now, the reason we're looking at red folder news is because these are levels of extreme volatility to the next level, right? It's just very violent volatility, and there's a lot of manipulation that happens within these market news. So usually what I do is I stay out of red folder news. It's the best way to stay profitable, right? Because at that point, you're pretty much just gambling. Sometimes it goes in your direction. A lot of times it doesn't, right? So you're pretty much basically gambling at that point because there's really not a lot of TA that goes into it because it's red folder news. So we try to stay out of that. We try to tell all the new users, the beginners, don't trade red folder, and just trust me, don't trade red folder no matter what. Because even if you do like hindsight and you go back and then you do what I did, which was I go back and I look at the trade, I'm like, oh man, if I would have shorted here and I thought I was going to short, I would have gotten like a 20x. Don't do that, right? Just don't worry about red folder news. Now, Sunday, tonight, we have no red folder news. We're good to go. But since we're inside Asian session right now, not a lot of like entries happening, not a lot of movement happening. So we're not really going to do anything, right? Asian session is usually going to be our consolidation session. And then you have London and New York. Those are the sessions that I would definitely recommend for you guys to trade because you get a nice level of volatility there for you in order for your price action to move your entry into your take profit quickly. Or if you really did a really bad trade or you calculated it incorrectly, it's going to take you to your stop loss a little bit faster than chopping away for hours and you not knowing what the hell's going on, right? So we want to be in and out, right, within a session. I do day trading. Some people do swing trading. So that's a different style, but today we're going to be talking about day trading, and that's pretty much what I usually do, day trading. So Sunday, we're good. No red folder news, but we're not trading. It's Asian session. Monday, it's going to be a bank holiday, US. New York session, less volatility, no red folder news for us. London session should be dying out around 11 a.m. because of the New York session's pretty much flat. It's going to be dead. Tuesday, we do have red folder news. For red folder news, we have GBP, right? The British pound. We have the Canadian dollar. And then we have USD. USD is going to be our Empire State Manufacturing Index. So we should see some volatility there. Not as violent as like CPI data or NFE, NFP, but we're going to see some nice volatility there. I do recommend you guys to, even though that the pair that you're trading might not be a USD pair, always pay attention to the USD pairs. The USD pairs are going to move the market and mess up your trades either for good or for bad, right? But your trades are not going to act like they should be when you're trading USD red folder news. I learned this the hard way. I was trading GBP, JPY, and I was like, okay, it's USD red folder. I'm trading a pound and the Japanese yen. It's not going to do anything to me. It reversed my trade entirely, hit my stop loss within one candle, even though it's going straight into my take profit, right? So stuff like that will happen. So try to stay out of the red folder news for USD on all pairs. You also have another GBP, British pound red folder on Tuesday, and also CNY. That's going to be your Chinese yuan. Wednesday, we have red folder news for the British pound. We have red folder news for the USD. Two different red folder news for USD at the same time. And then you also have the Aussie dollar red folder news on Wednesday. For Thursday, we have red folder news for USD unemployment claims. This is a very important report for us. We've been very bullish. We've been on point when it comes to this in the past few months. So use that as a grain of salt. We've been very bullish on that for the dollar. Friday, we do have red folder news as well. The pound again, and the US dollar again. Now, without further ado, let's jump into indices, right? So I'd like to start off with my NASDAQ. Let's talk about NASDAQ, right? What's been going on this past week? So we did identify a daily 4-hour fair value gap right over here last week starting into the market. and we tapped into it, closed above it. We had a candle closure right above it, and then continuation to the upside. Now we're gonna start looking at this on the daily candle, right? We have a new all-time high over here, which I marked out. That's a really high all-time high, right? We never seen levels in 17,000 ever when it came to NASDAQ. The chart that I'm pulling up right now for NASDAQ, it's going to be the NASDAQ futures charts. So this is like the actual futures, like liquidity when it comes to NASDAQ. This is not a broker chart that has their own versions of liquidity. This is the real deal Holyfield NASDAQ chart. So it should always work out to this. I do have another chart over here, which is my NASDAQ 8 cap, which is my Forex broker. But to get the most accurate readings and the most accurate plays and entries, we're going to go off base the futures charts. There's going to be a little bit of spread difference between this and a Forex broker, but that's fine. I want to get the actual real price action of the NASDAQ from the NASDAQ futures liquidity pool. So without further ado, let's go into this. So for the daily, we're going to identify a few key levels. This level over here has been mitigated. So this daily 4-hour fair value gap, we were looking for a bearish entry into here, but it broke through and closed the daily candle. So whenever you see a candle break through a level, a key level, and close the candle, that means that entire level is invalidated. Now, if you were to get something like this, which is a wick, right? You get a wick, that means that level is respected, and then your price action prediction is valid. And even more so when you see something like this, right? Taps into this level, huge wick, and then continuation. Next candle opens up above this previous candle, and then that pretty much just confirms like, hey, this is a valid entry right here. We did identify this level here on a couple of weeks ago. Yeah, like 2 weeks ago, December 17th. A few more weeks, excuse me, not just 2 weeks. December 17th, we identified this as our daily fair value at 50%. If you were to put in a long position here, right, with your stop loss being down here, you would hit your 2-to-1 ratio already. So that's what we like to trade off of. We like to trade off the fair value gaps, which are these little areas of imbalance, followed by a displacement to the upside or to the downside. And we usually trade the fair value gaps. So this level here has been mitigated, and it was such a beautiful entry, guys. Like, gosh, I wish I would have set a limit order there, but was not trading the last 2 weeks of December. We do have this one right here, right? So we do have a fair value gap over here. We're going to identify this level together. We're going to color it blue because we're looking for long positions, right? So retracement, tap up tier, retracement. And I'm expecting this to pretty much do this, right? I'm expecting it to like bounce around and then just die out. So let me show you. Where are you? Where is my brush tool? So something like this, right? We're expecting it to somehow go back down here, probably grab a little bit of liquidity, not break through, maybe wick, come right back up into here. There might be some fair value gap that forms here in this area, and then break through and then bounce off this area here, right? This area here is a very key level for us, because then that means we're just gonna free fall into bearish, a bearish trend. So we're expecting this price action needs to come down. It's already forming a lower high over here. Once this candle is confirmed closure as bearish, or it closes below this candle here, then we created a lower high, and now we're changing the trend to, excuse me, let me identify this. Now we're changing the trend to bearish, right? So price action needs to come down into this level here. So let me get this out of the way. We're identifying this level here. Let me zoom in a little bit more for you guys. Now, if you're not familiar with fair value gaps are pretty much areas of imbalances. Imbalance means like there's nothing testing it before, no candle here before, no candle here after. There's zero price action at the immediate candle before, and there's zero price action at the immediate candle after. So you just get these gaps in the market, right? These gaps in the market are usually huge institutions that are buying and displacing the market, either bearish or bullish. And then these levels here are pretty much left over for that price action to get filled in again, and then it moves in the same direction that the displacement was caused. So in this instance, we have everything bullish fair value gap, meaning it needs to come back, refuel. That's what I like to say. I like to refuel, and then it takes off. Same thing in a bearish direction. It refuels, and then with pressure goes down, right? So this is pretty much picking up liquidity. That's pretty much what it does. Picks up fat liquidity levels there, and then it continues up. This is bullish. Coloring it blue. The level of entry that we're looking at is going to be right over here, right? We're going to mark it together. Alt H on your charts. Make sure it's right there at the 50% mark. Let me make sure this is not too thick. Coordinates for you guys, if you want to place it. The line is at 16,617.75. We're going to color this blue as well. We're going to label it as a daily fair value gap. 50% mark. And then when price action comes down into this level, this is where you want to trade on your lower time frames. You're going to be looking at your lower time frames like 5 minutes, 15 minutes. That's where you want to be trading at to make sure that you get a nice little entry, but inside areas of points of interest and inside, you know, your fair value gaps, your 50% marks, that kind of thing. I do have a picture here for you guys to understand it a little bit better. I'll put it inside the Discord. The price action too, when it comes to the lower levels. Where do I have it here? So pretty much if you're starting off for the daily, your entry is going to be the 1 hour. You start at the 4 hour, your entry is going to be 15 minutes. If you start out on the 1 hour, your entry is going to be in 5 minutes. What I like to do, I identify high time frames. I do daily 4 hour, and then I get in at 15 minutes for those two different higher time frames. Now we identify the daily fair value gap. We're waiting for it to come down into this level here, right? That's going to be our point of entry for a buy position. Now we also use a couple other things when it comes to identifying points of interest. I use SMC, Smart Money Concepts. One thing that is used in Smart Money Concepts is going to be optimal trade entries. If you're not familiar with your Fibonacci tool, get very comfortable using your Fibonacci. I'm telling you, it's like a cheat sheet. Fibonacci tool is going to be found over here on the left side. Click on this little arrow, click Fibonacci retracement. I already have my settings selected. Since we are on a downtrend on the daily, I'm looking for an optimal trade entry in order to get a short position and continue to the downside. We're going to pull from starting, which is the highest position. Then we'll go bullish, and then we're going to the retracement, right? This is what it looks like. I'm going to pull it a little bit more to the right, and then I'm going to share with you the settings as well. For the fib retracement, the coordinates I use are 1. I use 0. 1 is my area that I'm pulling from, the initial area I'm pulling from. 0 is where it ends up at, so like the retracement. 0.62, that is your golden pocket. If you do retail strategies, you will be very familiar with the golden pocket. A lot of people go inside the golden pocket. That's their area of entry. I like to focus more on 705 and the 79. So 0.62, 0.705, 0.79. Now my take profit, that's going to be the negative 0.27. I'm going to take a screenshot of this for you guys. I'm putting it in the Discord. And then that way you have something to reference when it comes to the Fibonacci's tool. Now, how this works is your stop loss is your 1 point, because if it passes by that, over that, and closes, then that means this entire play is invalidated. That means that this will continue bullish. Now, if you enter on what I like to do is the 0.75 and the 0.79 levels, if you enter into those levels, then your take profit's going to be down here. What I also like to do is when I'm pulling these fibs, you'll also notice like on lower time frames, these levels will overlap with fair value gaps. So something like this, you'll see them overlap on those fair value gaps. And then that's going to be your confluence saying that that's going to be a higher quality trade. So you should be even more comfortable getting into those trades, more confident. I just pulled this here. I already have a trade that's running. My entry was here at the 7.9. My stop loss is at the 1. So just so you can see, for example, this is my entry. This is my stop loss. And then also because my broker, my Forex broker has a little bit of spread, I add $10 to it. So right here it says 17,167. I bring it up to 17,177. Right? So that's going to be my stop loss. 17,177. That's my stop loss in order to have that spread, which is really tiny here, but it makes a big difference when you're trading live. That's already active. It tapped into it and now it's rejecting. My take profits down here. You still have some time to get into this trade if you feel comfortable with it, but double check your strategies and make sure that, you know, everything's aligned with your price action and your trading strategy. Don't just get into it blindly, but this is what I'm currently doing at the moment. And this is what I feel comfortable in as well because we're on the daily. Now we're going to go down to the 4-hour time frame. We're going to identify any other levels that we see here when it comes to the fair value gaps. We do have this here, but it's been mitigated because it's closed above it. We have accumulation here. There's nothing going on here, just huge wick here, right? We're getting reversal signals here by EZAlgo. So it makes me feel a little bit more confident that we're finally turning bearish after all this just bullish price action. We also have this 4-hour fair value gap here, overlapping the daily fair value gap. Let's label this one here. This could be a nice point of entry for us as well. This one's at 16,539.25. Right? We're going to label this 4-hour fair value gap 50% mark. Let's focus on those two different levels here for areas of entry, because what we want to see is for it to come down into this area, take liquidity, refuel, come back up into a fair value gap, and then there's not going to be anything down here. Once this is mitigated, that means there's nothing holding this back from continuing down until it gets to here, the 4-hour fair value gap overlapping the weekly. Here we'll see some nasty price action shooting it right back up, right? If it plays out just like we wanted it to, that's what we're going to see. Nothing overlapping with the optimal trade entry right now, but you do see here on the 7.9, it's closing underneath it, right? So if you're a supply and demand trader, you're going to see like this is going to be now a resistance zone. It's not breaking over it because it's closing wicks. I would feel comfortable getting into here on a higher time frame position as a short, right? It looks pretty good. Not technical advice, right? No trading advice, but just comfort, right? I feel comfortable in this as a trade being bearish. 4-hour, I don't have anything else on the 4-hour. That's all I see. Just a little bit of chop here. So we'll see what happens with this, right? It could literally just shoot right back up, or it can completely dump. But price action right now, it's telling me that it's going to dump into these areas here. Whether it goes up a little bit and then dumps, whether it goes up, breaks all-time high and then dumps, I can't really tell from this price action here, but it's going to dump, right? Let's go down to 1 hour. What does the 1 hour tell me? 1 hour tells me there's continuation here into the chop. Oh, this is chop right here. Accumulation. Here is a fair value gap. So remember how I told you, like in the fair value gap, it's going to be an area where it refuels, it goes right back up. That's your 50% line. Tapped into it, wicked off it, continue up, right? Fair value gap, displacement, fair value gap imbalance, refuel, continuation. That's already been tapped into. So this has been mitigated, which means this is no longer valid. So that means there's nothing holding this back from going back down, besides this little tiny fair value gap over here. If you're a scalper, let's identify this for you, right? This is on the 1 hour. But once it starts free falling, it's not going to do much to hold it back, but let's identify it, right? You can probably scalp this, get a couple pips out of it, in and out, and call it a day. All right, this level here. This level here is identified as, excuse me, 16724. We're gonna label it as well. 1 hour fair value gap, 50%. And we're good to go there. So we identified only 3 levels, right? Because that's pretty much all that was displayed. This is all chopped indecision. If you trade inside here, you're gonna get chopped up. Don't do that, right? Wait until something is clear. Price action is clear for you. We identified a fair value gap on the daily. We've identified a fair value gap on the 4 hour, and we've identified a fair value gap on the 1 hour. Does anyone have any questions for me when it comes to NASDAQ? If you guys don't have any questions on NASDAQ, let me get a thumbs up inside the chat. Once I get 3 thumbs up, we'll move on to the next pair. Next pair is going to be gold, for the gold traders out there. I got 1 thumbs up. I got 2 thumbs up. Everyone's so quiet tonight. Alright, we're gonna move on to gold since I have no questions and I'm getting some thumbs up. We're moving on to gold now. Let's look at gold. I love gold. Gold. Oh damn, I completely forgot about this. I didn't set a limit order? I'm a fool. Alright guys, so we're gonna start off with the daily. You're gonna see on my charts, I do have a couple things marked out, and I'll explain why. Right now we have that military conflict, whatever you want to call it. It's not a full-out war, but it is a military conflict. US and UK have bombed Yemen. Whenever there is any active war in the world, you're gonna see that gold starts to surge. Same thing happened with the war in Ukraine. Same thing happened with, Israel. And it's kind of crazy too when you look at price action, because price action moves how it's supposed to, which is really like creepy sometimes. You'll notice like price action moves exactly how it's supposed to, right? So let's say, for example, I want to show you
October 7th.
October 7th, exactly. Yeah, where you at? You're right here. This is crazy, right? Where are you? Right here. Yeah. So October 7th was on Saturday for us. So let's say you were right over here. Let me show you this, because it's really crazy, because price action does get baked into everything. If you're a supply and demand trader, what do you see? Right? Fat demand zone here. So supply and demand traders would trade it as a demand zone. Pretty scary. All this is bullish momentum on the daily. Now if you were to go into the weekly gets even more scary. Look how clean this price action is. This is your demand zone. You trade that, and then a continuation to the upside. Why? It's so clean that it's scary. Now, if you are a smart money concepts trader, let me show you this. Let's do our 50% mark. We're gonna enter on the 50%, and then our stop loss is gonna be underneath this, the bottom of this structure, because if it breaks through the structure, that means we're bearish and it's completely invalidated the zone. So even on the weekly, as a SMC trader, here's my 50% mark. If I were to get into that, and then I target 2 to 1, this is my stop loss here, and then I target 2 to 1. It's crazy. Even war is baked into the price action. It is insane. So whenever you want to like get confluence in your price action, zoom out, go to the daily, go to the weekly, see what's going on. It gives you a little bit more clear direction, and it gives you more confidence as well for your trades. So going into the daily, remember for the optimal trade entries, because what I see here is this is all-time high over here, closed out right over here at 2079, and it's not breaking through. This is my retracement, so I marked this as my retracement at the time on the daily, and then my entry points are here, the 62, the 705, the 79. So I marked those areas there for pullback. So when it taps into those areas, I'm looking for shorts. So we're gonna highlight all this area here for you guys. So you guys can be a little bit more comfortable. We're looking for shorts over here for price action to reverse into a violent short. So the zone here for you guys to see, it's between 2061 and 2079. This is on the daily. Right now, we don't really see anything else forming. We have a daily fair value gap down here at 2010. And that's going to draw this price action in. So this price action needs to come right back into here, hit it, go up, and then die, right? So as of now, that's the only thing we're seeing on the daily. 2010, that's your fair value gap 50% mark. Make sure to mark that, set an alert. And you can play it as also an entry for your longs, because it is a very high time frame confluence, and it's going to be continuation for this. So that should play out very nice. Let's go down to 4 hour. Let's see if we identify any fair value gaps, anything as our point of entry. I do see this area here. It's not really showing up as a fair value gap for some reason. But this area here is a fair value gap, but it didn't show up because this has been mitigated. You see this wick here? This wick means it grabbed all this liquidity and then continuation to the downside. So you see this market structure shift. That's a change in the market. If you're using EZAlgo SMC, that's your market direction is changing. So remember, our entries are going to be these fair value gaps. If you identified this area here as a 50% mark, you would have gotten in at the 50%, and then at the top of the structure here would have been your stop loss, right? Whenever you have a fair value gap, it's usually 3 different candles, and you want to set your stop loss to the top of the first candle that started the 3 structures. So this is 3, this is 2, this is 1, and then if it's flipped, you put it right underneath, right? Which gives you enough room for the price action to breathe. And if it stops you out, that means you're back to being bullish. But tapped into it, collect the liquidity, and then move down. Easy 2-to-1 risk to reward. Now we do see market structure shifting here. We have a fair value gap that's left over here on the 4 hour. We have a fair value gap here on the 50% that hasn't been tapped into completely. It tapped into it like right before, but we're gonna identify this one right over here. So this one here, we're gonna mark it out. We're gonna color it red. Excuse me, we're gonna color it blue. Coordinates are 2031.24. That's gonna be an area here that we're gonna be looking to get into. So that's gonna be marked out as 4 hour fair value gap 50% mark. And then if you want, if you were to trade this, if I were to trade it, right? Because you have a different strategy. And then you guys can also pick out different strategies from the user strategies channel here on the Discord. How I would trade this is my entries are the fair value gaps. My stop loss are the first candle that caused the fair value gap, right? So it'd be right underneath here. You also have sell side liquidity here. So it would look something like this, right? For example, we're always targeting 2-to-1. I want to be a little bit extra safe, so I'll put it under that wick. Target 2-to-1. That's usually how it plays out. Right? So we're waiting for this price action to come right back down into it. I don't have anything else on the 4 hour. This, we're going to say it's mitigated because it's already played in this area in the fair value gap. Let's go down into the 1 hour to see what's going on. And then this one, it's close enough to the 50% to be mitigated. So we're now bearish. Then you also have this one over here. That's a pretty big one. I like this because it's a confluence. You have a bearish fair value gap that hasn't been tested by a candle before or after. And then you also have a bullish fair value gap that hasn't been tested before or after. So this whole pocket of liquidity here has been uncontested. So it either broke through coming down or broke through going up, but there's a lot of volume in here, and there's a lot of money in this area here that needs to be tapped into. So we're gonna mark this area out. This is a 1 hour FEG, 50% mark. That's gonna be a high level of confluence here, so pay attention to this, okay guys? Make sure you know, set your alerts on this. If you want to set your alerts, it's like this. And we're gonna set alerts and watch this area very careful. Also, this area is important for us because it's right by the daily fair value gap that's right over here. It might actually break right through this and go straight into the daily fair value gap, reject off it, go back up, and then go into the daily fair value gap. But we need to watch this area carefully because it's a very important area and there's a lot of liquidity in there. Now, does anybody have any questions for me when it comes to gold? Do we feel confident on the daily, the 4 hour and the 1 hour levels? And do we feel confident that we should be getting a rejection in this area here in order to start targeting this daily fair value gap? And then pretty much turning this price action into bearish momentum. Sorry, I just saw the message in the chat right now. Gold goes up with bad news, right? Kind of. One thing for sure, war, any kind of war will drive gold up. And you could say, yeah, with bad news, let's say like natural disasters or whatever. Reason being is that the gold assets are being valued more, and then money kind of like loses a little bit of worth because people are investing more into gold because it's more safe in a way, right? Than anything else that's in the market. Fundamentals are, yeah, bad news, economic news. When it comes to economic news, it's a little bit different. War is just, that's based on fundamentals. Gold is valued more. There's a lot of fundamentals behind that. I don't really trade too much other fundamentals because that's another rabbit hole that you go down. But just think of anytime there's war or military conflict, gold is gonna go bullish, go parabolic. Just always keep that in mind. Economic news, the reason being bad news means gold goes up. It's because it's a red folder USD news. You need to see that there's also a correlation, right? When you're trading XAU USD, that's two different parts. That's gold, and then the second part is USD. Think of it kind of like as a justice scale. If you put too much on the gold side, then the USD side it goes up, right? So gold goes down because there's too much of it, and then the USD goes up. But if you invest too much money into USD, then it goes down, value of USD goes down, and then gold goes up. Same thing with crypto. If the DXY, which is this, I'll show you right now. DXY means dollar. If this goes up and it is bullish, that means all assets that trade against it go down. So for example, here we're bullish, which means my NASDAQ needs to go down. It also means my gold needs to go down, because the more dollars and the stronger the dollar is, the weaker assets are. So yeah, it is tied into war, it is tied into economic news, but we're talking about strictly the USD news, economic news. Alrighty. Let me get 2 thumbs up in the chat and then we'll move on to the next pair. We're going to be talking about Euro USD. I also want you guys to let me know which pairs you want me to talk about as well when it comes to Forex. We're already done with the indices. We're done with metals. I was going to do some US 30, but the wave's already done. It's gonna start dumping soon, like beautifully. I mean, yeah, I'll touch US 30 actually, so you guys can see. So I'm super bullish on US 30. I'm expecting it to come back into, go over UJ after EU. Yeah, you got it. I'll do that for sure. US 30, I have this level here. This level is 36,834. That's in a daily fair value gap. I drew my optimal trade entry from here to the pullback, right? Which it looks like it's an all-time high. Yeah, it's an all-time high. So my pullback is the all-time high. So what I'm trying to see price action do is tap back into here, into this level here, the daily fair value gap. It's also overlapping with my optimal trade entries. So I do see that the 705 and the 79 overlap two different daily fair value gaps. So this actually might break through this one over here, tap into the 705 and then continue up. So I would definitely set my limits over here on the 705. And I would set one at the 79. That's what I'm looking at right now. And then target my negative 027. But the fact is, this is the all-time high. So I don't have any price action here to compare it to. So to be conservative, I'm only going to target like the top of the structure, which is still good risk reward. It's 2.65. But if you want to be even more conservative, we're going to go for 2 to 1 risk reward. And that's going to be right here. And then this is an area where price action has tested out already. So that's what I'm looking at when it comes to US 30. So I have 3 different levels of FVGs, daily FVGs. They're all bullish. Continuation to the upside. 3.6, right? 3.6834. We also have 3.6491. And then we also have 3.6341. All 3 of these levels are high probability entries for bullish positions because they're daily fair value gaps. We also have a really strong zone here that I want you guys to definitely identify and set alerts. This is a weekly, a daily, and a 4-hour fair value gap 50% area that overlaps all 3 of those higher time frames. This area here is 35686.32. We can round it off to that. And then we'll move on to Euro USD. Let me put this one here. I have so many Euro USDs open. Let me close this one here. What is the minimum account base you want to have to trade US 30? There's a ton of different Forex brokers, right? So that's a really good question. So there's a lot of different variables that comes into that, right? So it really depends on your Forex broker and the amount of leverage that they give you. And then also every broker has a different allotted amount for indices. I've never used EZAlgo, right? So I can't comment on them. I am also US based, so I'm very restricted to what Forex brokers I can use. I usually use prop firms. They use 100x leverage, and then when it comes to indices, I have 20x leverage. So for example, I used to use Hugo's Way, and Hugo's Way I used to have 500x leverage and 0.01 lot of NASDAQ would be exactly $175. So you definitely need like 5-figure account in order to be trading like US 30 or NASDAQ. Now US 30 is going to be like double that, so you need like $370 to trade a 0.01. So they're very expensive when it comes to trading those 2 different indices on Forex brokers. That's kind of like why it's better to trade with like prop firms, because then you get access to like a 100k account, and then you can trade like 3, 5, 10 lots when it comes to that. Exactly. Some other brokers offer mini instruments, so you get smaller amounts. So there's also, for example, like you'll see like on the charts, they'll say like NASDAQ. Some of them will be like NASDAQ.cash, and then that's like a 1/10 of the value. So instead of being 170, it'll be like $17. So all the brokers are different. It's super confusing when it comes to that. But yeah, indices are really expensive, so expect that to be like the most expensive like lots positions when it comes to that. And then what do you mean by proverbs? What is that? Is that another exchange? I did say prop firms, excuse me. Prop firms. Yeah, so that's prop firms. Definitely do your own research on that. That's another different rabbit hole, but it's pretty much like capital you get to trade with. And then if you're very, very profitable and you're doing great risk management, then you get paid out on that. So I did post some information up top on prop firms. Kimmel Trading dedicates himself to, you know, explaining prop firms and how they work. And yeah, he does a lot of videos just based around prop firms. Let's go over Euro USD. Euro USD. Let me remove this optimal trade entry, the OTEs, the fibs. I don't want to confuse you with that. Daily fair value gaps, right? We're expecting this price action. Right here's accumulation. It already tapped into this fair value gap, this bearish fair value gap. So we should see it continue down into this fair value gap here. So we're going to see daily 4-hour. They both overlap here on this mark here. Set your alerts. This level is 1.08461 for this level. And then that's pretty much what we see here on the daily. Price action tapped into here. This is a level that I marked out. This is July 2023. Weekly fair value got 50% mark, and then it got rejected out completely, right? It closed inside the fair value gap. It didn't break through it, so we are not bullish. We are still continuing down. It got rejected off perfectly, right? Because those are only wicks up there. So on the daily, we are bullish, bearish. We are bearish now until we get to this point, the daily and 4-hour fair value gap. And then we should be expecting price action to tap into it and continue up. Or if price action is violent enough with all these news days, right? So I marked out these days on TradingView to show me these are news days. These are red folder news days. It might actually be back-to-back days that are forced it to go through this level, tap into the weekly, and then violently go up. This is a weekly level. For me, the weekly levels are extremely important, and they're also higher probability when it comes to like your daily, your 4-hour, your 1-hour. Weekly levels are amazing, right? They're very, very powerful. So we should be seeing some violent rejection, especially when all three of these are so close to each other. Might even tap into all three of them and then just insanely rocket up. But we'll see what happens. So for right now, we're watching this level here, and we're watching this come back down into this level, right? So we are bearish until it gets to here, and then we're looking for entries, bullish. That's on your daily. Let's see what it looks like on the 4-hour. Let me turn off the Sniper Pro. I don't want to confuse you guys. And then, yeah. Let's check out the fair value gaps. Right? Tapped into over here. And then continuation downside. Fair value gap was left here. Displacement down. Tapped into it. Did not break above this. So we are still bearish. Right? Our bearish bias is confirmed and it doesn't break through. And then you have a double tap here. Double top. That's going to be your equal highs. Continuation to the downside. Fair value gap here has been tapped and mitigated. Fair value gap here has been tapped and mitigated. Fair value gap here has been tapped into and mitigated. Continuation is going to be down to here, to the daily 4-hour. So we don't have any entries here on the 4-hour. This price action is going to be chopped up. This is going to be chop city until it gets down into here somehow. On the 1-hour, same thing, chop city. Fair value gaps being tapped into. No direct price action. This is all chop. Don't trade this. Wait for price action to tell you it's going one way or the other, but get some confluences and get confirmations. 1 hour, it's all chop city. And we're still bearish bias, right? You see lower here creates a higher high, but then you get lower high, then you get lower low, then a lower high, then this is a higher low. So this is all chop. Chop, chop, chop. Does everyone feel comfortable with Euro USD? Right now we're expecting Euro USD to go down into this daily 4-hour fair value gap, but until it gets there, it's just going to be chopping up with no clear direction until it gets to this point. And this news actually might drive it up violently up, taps into this area here again, collects more liquidity, and then dumps into this area. You guys good? Let me get some thumbs up in the chat. We'll go over next. It's going to be USD JPY. Got some thumbs up. Let's go. Actually have it open already. Let me close out this bad boy here. Sniper Pro. Sniper. Pretty choppy. Let me go into the weekly so I can see a little bit better the price action. You have a double top over here. Did not break that. It's gonna be a perfect rejection. We have a zone here that's really important. So this goes in line with the lower time frames price action. So we should be seeing this tap into this zone and then continuation to the upside, because here are your higher low, higher low, higher low, higher high, higher high, higher high, and then you have a lower low. So continuation of these lower lows, lower low, lower low, lower low, lower low. As a continuation, we need to form a higher high. How are we going to do that? Collect liquidity, get some fuel, rock it, and then create a higher high. This is going to break right through that. This is the weekly, right? So this could actually happen within like a month or two. Let's go down into the daily. But before we do that, let's mark out the zone. This zone's important as hell. You guys are going to thank me for this later. Because once you see it jump into this little zone, and you get those confluences, and you long this, oof, gonna make some money off of this, right? Let's say you do something like this. Target the structure. Structure high. That's a 3-to-1 risk to reward. Right? So let's label this area here. This is going to be a weekly fair value gap 50% mark. And I want you guys to all set an alert to this, because this is going to be an amazing trade for everybody in here. So you guys saw it here first. The area we're aiming at is 143.137. We're going to label this area as weekly fair value gap 50% mark. I like using caps lock because it looks a lot cleaner for me. Right? So that's what we're looking at for the weekly. Let's go down to daily. Daily, we have one right underneath that. So let's mark that. We're going to label it daily fair value gap 50% mark. But honestly, like, this is what I'm aiming at the weekly. On the daily, well, if you look at it on the weekly chart, you'll probably see it wick through here, not break it, collect more liquidity here, and then probably down here, come back into the zone and then continue up, not close the candle underneath it because that's weekly. But on the daily, you could probably see it tap into here. So we're going to identify these two zones. We'll probably put our entry in here to get an even better risk to reward. Do I have anything up here? No. This needs to retrace. Yes. Where is it going to retrace to? Let's see if it lines up with the OTE. OTE, I'm going to pull from the lowest point to my highest point. Does it overlap with my fair value gaps? Yes. The 0.62 overlaps with the fair value gap. We put it to here because this point here looks like it was some news. The lowest point here, and now that's overlapping here in this daily 50%, and then it overlaps with the 705 as well. So these two entries here are high quality, but I want to target this daily one. So I'm setting my alert here on the daily, and I'm going to set an alert on the weekly too. I want to see what happens when it comes to these levels, especially in the daily. Let's check out on the 4-hour. Guys, by the way, if I'm going a little bit too fast or if you're a late joiner, this is all going to be uploaded live on YouTube within the hour once we're done over here. And then I'm also going to put it into the chat. It's going to be under live recordings, which you can get right here. I'm putting that link inside the chat so you guys can see it as well if you need to recap on YouTube. But it goes live on my YouTube, and then it goes live right here in the live recordings in case you ever miss it and you want to catch up. Remember, these are just for us to go over the price action on Sunday to see how the market's going to play out throughout the week. A lot of these levels get tapped into. A lot of these levels get respected. So these are a lot of opportunities for you guys to be able to get into these trades and have higher quality trades inside these points of interest. Now we're looking at the 4 hour. What do I see on the 4 hour? I don't see much on the 4 hour, honestly. I see a fair value gap here that's got tapped into. So this has been mitigated. So tapped into that, goes down, might even just tap into it a little bit more and then just continuation down. Fair value gap here has been mitigated. This one has not been mitigated. But we want this price action to go into this level here, the weekly or the daily, collect liquidity, and then continue up and then break through this structure here. It needs to break through, right? It's got to break through the structure, and it'll break through this as well. It'll tap into the structure. So I need to come back and retest this, because we're seeing here on the weekly, we're seeing higher low, higher low, higher low, higher low. It's continuing up. It's still extremely bullish. 1 hour, let's check out the 1 hour. Same thing, fair value gap tapped into. Has it? Not really. Yeah, it hasn't really tapped into the 1 hour fair value gap, so it might just go from here to up here and then dump into it. But that's what we're looking at right now, gang. We're looking at this area to get retested, these two here, tap into those areas, and then continuation up. This is going to play out over quite some time because those are weekly levels, so we're looking at like a month or two. Let's see, what other pairs do you guys want me to go over? So we did Euro USD, we did UJ USD JPY. I do not like CAD pairs though, because they're kind of weird, and for me the price action's never gone my way, so I pretty much blacklisted them. Come on guys, no one has a Forex pair they want me to go over? Don't be shy. Remember, this is very casual, it's not very formal. GBP NZD. Dude, that's like kind of exotic. What is that? What? Pound? Mazi, are you trolling me? That's an odd pair. Swing shorts on the daily. I guess, man. I don't even look at that on my charts, but let's add it. That's GBP NZD. What in the world? It's not even on ACAP, is it? Yeah, it is. That's funny. This is a funny pair. Oh, why do I have zones labeled here? When the hell did I look at this? It's so weird. I think was it you that asked me about this? Yeah, it's probably someone here in the Discord that asked me about this, and I was walking them through. Swing short. I don't think so. This fair value gap here was tapped into. Daily bullish fair value gap. Rejection to upside. We're looking at daily levels right now. If anything, it's going to tap into this level here. You also have this order block here with sell side liquidity. We have a breaker structure. There's no breaker structure here, and there's no market structure shift. So yeah, I mean, you could say that, yeah, you are bearish, right? Boom, 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 boom. And the way I have this here as well is it's supposed to be bearish. So this is what I was looking at with another Discord user. So these levels are really key levels here. 0.79 is being rejecting off that. Wait for this candle closure on, like, let's say a 4 hour. Wait for the next candle to close on this, and then if the next candle closes bearish, this one closes here, and then the next one closes bearish, and this is going to be a lower high that's formed, and then I would feel comfortable going into that as a short into the sell side liquidity. You have this fair value gap here, so it's going to cause you some kind of problem. So if anything, I would say take partial profits here on this fair value gap here, and then full profit over here at the bottom of this structure. I do see that, oh well, fair value gap here as well overlaps with the 0.79 for my entry and is as a short. So that's a confluence. That's a very beautiful confluence to have. So honestly, just based off this and this here, and the fact that our structure is here, in order for it to be invalidated, I'd say, yeah, I mean, I feel pretty confident in this as a short. So I'll probably set like a limit here, but I guess we're already past that. And then I'll set my stop loss above this here, right? So I want the candle that's before the fair value gap. So this little top of the wick, that's going to be my stop loss, and then target the bottom of the structure. So it's going to look something like this, right? Oops, sorry. Stop loss is here. My entry, if you want to go in now as market, and then my take profit is down here at the bottom of the structure. I'm going to put it at the bottom of the candles. You're looking at a 3-to-1 risk to reward, 2.99. And then that could play out. This is on the 4-hour. So that means that's going to play out in a couple of days, maybe like 2 weeks, depending on the price action. But yeah, from the looks of it, your bias is good. Your bias as being bearish is good. And I'm just surprised that you're another trader that does GBP NZD, because I already have these marked out for someone else in the Discord. Not a pair that I trade, but pretty cool that you trade it. GBP USD. Let's go over GBP USD. This is a more normal pair. That's invalidated. What are we looking at on the daily? Chop City. Indecision as hell. But equal lows. I mean, we're still, I don't know. I can't tell you we're still bullish. This price action doesn't give me too much to pretty much like refer to. Yeah, I don't know. I can't tell you on the daily. Let's see on the 4-hour. 4-hour, we have a fair value gap right here that's been tapped into. You have this 4-hour fair value gap that's been broken through, and it's become now an inverted fair value gap. Honestly, I can't tell you how GBP USD is looking. It's not very clear price action to me. I wouldn't trade this. This is all accumulation for me right now. This is all just chop city. There's no clear price action. It's not like if it was this, right? This is clear price action. I would say that this is still active. It has not been mitigated. So somehow this price action here needs to come down into here, tap into it. This level here is 1.25793. It's going to tap into that all the way down into here, which is a weekly, 1.25478, and then go back up. It needs to tap into these zones. And these zones are very, very strong, and they overlap. So we'll see some price action tap into that and reject as bullish momentum. All right, guys. Does anybody have any questions for me for today on basic price action, on, well, the strategies? You can see the strategies in the Discord, but anything on the basics, any questions on the basics, anything you don't feel comfortable with, anything you want me to go over again to make it a little bit more clear for you, feel free to ask me questions. Don't be shy. Remember, we're all here to learn and to make each other better, profitable traders. That's the end goal here for this community. We want all of you to succeed and for everybody to be profitable. And one way to do that is by asking questions. And I'm here for that. So whatever questions you guys got for me, let me know. Let's go over those questions. And if you don't have any, then that means I'm going to have to finish the live for tonight, but I do see someone typing in the Discord right now. All right, gotta run. Okay, cool. No worries. Thank you everyone for joining me tonight. Tonight was an amazing Sunday night charting session. Thank you all for joining me. For all the new people joining me this evening, remember, every Sunday, 7 p.m. Eastern Standard Time, I'm going to be here on the charts. We're going to go over indices, metals, and Forex pairs. We're going to go over all that together, get you comfortable, and also discipline, right? When it comes to trading, a lot of discipline is needed in order to become a successful, profitable trader. And part of that discipline is joining me on Sunday Night Lives and going over the charts together, and then having that bias for the week so we feel comfortable and confident going into those points of interest and getting those high level trades. Thank you everyone. Have a great Sunday night and have a great profitable trading week.